What's your response to the investor response here?
Look, I mean, we take it seriously. We can say that revenue in Q3 was at an all-time high for the company. We guided into Q4 of adjusted EBITDA at an all-time high, and again, record revenue. On specifically on riders, the same increase in active riders that we saw quarter over quarter was approximately what we saw seasonality-wise in 2019. So no big change there. And then in October, we can say that we saw 6% month over month ride growth, which is actually faster when compared to the same period in 2019.
Well, and in addition to record revenue, you saw record revenue per rider. But there are real concerns that you're ceding ground to Uber. Are you?
If you look back on the quarter, third-party data shows about 1% movement. And we've actually seen share tick up post-quarter as we rolled out new products for our drivers, including upfront pay. It's been a narrative, we've been talking about this for a decade. We've been in the business of Lyft for a decade. People constantly asking this question of what we're doing, Lyft versus Uber. And we've consistently over that decade taken market share. And we feel comfortable where we are and with the products that we added to the market in the last few months, where we'll be in the coming quarters.
We've talked about this many times over the last decade, so I appreciate you bearing with me, John. How is driver supply relative to 2019 levels? Uber said they're back.
Yeah, so I can get more specific than they're back and say that quarter over quarter, active drivers increased the most that it has in about a year. So we are seeing a return on the driver side again with the new products. We're seeing increased driver hours. I think there's still a bit more opportunity to go to get back to kind of pre-COVID service levels, but we're the closest to those that we've ever been.
So got to ask about Prop 30. I went and voted on it today. Lyft is a huge backer of it, this proposal to raise taxes on the wealthy to pay for electric car rebates and charging stations. That said, after you backed this, Governor Gavin Newsom came out with a flurry of ads saying to vote no. What happened there? Why is Lyft so for this? Why is the governor so against it? And do you have any regrets?
No regrets. Won't speak to the governor's perspective, but I can say that, California has the highest, some of the highest, if not the highest, or lowest air quality in the country. And as you look at vehicles, or electric vehicles, historically policies have centered on people who can afford an electric vehicle getting an incentive to buy an expensive electric vehicle. What Prop 30 does is it really addresses lower income populations and makes sure that they can get an electric vehicle. And we think that's really important. It also puts money towards fighting wildfires.
Still, the governor called it a Trojan horse that puts corporate welfare above the fiscal welfare of the entire state. And Uber hasn't taken a position one way or another. I actually asked Dara Khosrowshahi why a few days ago. Take a listen to what he had to say.
We feel like we're making the right investments. We are, for example, lowering our own booking fee and making sure that drivers can make more on a trip basis when they move over to EVs. And in partnership with both public and private, we think California is headed in the right direction, which is why, we've stayed out of Prop 30 one way or the other.
John, on the face, it seems like this proposition would benefit Uber as well. Why do you think they didn't take a stand?
I can't comment on why they didn't take a stand or haven't taken a stand on other important issues of our time. But I can tell you why we did. Again, we think it's the right thing for the entire state in terms of the environment, in terms of the air quality, and in terms of allowing any driver, not just a rideshare driver, but any driver in the entire state to get access to a more affordable electric vehicle.
So look, another question that I know I've asked you a few times over the years, but folks are asking it again, given the recent quarter. Uber has seen success, moving into food delivery, cross-selling it to riders. Are you thinking about that at all? Would you consider, for example, strengthening the partnership with Grubhub to potentially drive some additional revenue?
We've done some B2B delivery, so we have no plans, no interest in doing kind of a consumer delivery that competes with their Eats business or DoorDash. But we do want to find opportunities for drivers that like driving on both delivery as well as rideshare. That said, rideshare drivers have historically always earned more than delivery drivers on average over the last several years. And so we think our focus, particularly if we do head into a recession, where people typically spend less money on takeout or delivery, and where transportation is more resilient, I think we're still coming off the tails of a pandemic where that was very popular, and it was helpful to have both those. I think in a recessionary environment, we're comfortable and confident in focusing on consumer transportation.
Meantime, the markets haven't been kind to most companies, and especially tech companies. Lyft now has about a $4 billion market cap. Would you consider a sale or a merger at this point?
No, we're focused on being an independent, profitable business, and we're gonna focus on that and stay the course.